The world's second largest economy is growing at a consistent rate. China's gross domestic product expanded at a steady 6.7% pace for the third straight quarter. And as Eunice Yoon reports from Beijing, that hasn't happened since China started reporting the figures back in 1992.
Economic stability has been the main priority of the government here, but to some economists, the numbers today looked a little too stable. Q3 GDP came in at 6.7%. That's the same number as the first quarter as well as the second quarter, and that's been raising some skepticism about the veracity of the numbers. That said, many economists were focused on the September figures to get a better sense of the growth momentum. Industrial output came in a little bit lower than expected, but retail sales as well as fixed asset investment both improved. Now, what was driving the growth in the third quarter? Well, it was government spending as well as recovery in the property sector. The government was green-lighting infrastructure projects, and at the same time, it was through the state banks unleashing a record amount of credit, and that helped to lift the housing sector. Now, as much as these government policies have helped support economic growth here, they've also been leading to some concerns about potential new dangers, such as asset bubbles. The property sector has seen a run-up, especially in some of the big cities such as Beijing and Shanghai, and this is even as authorities are trying to rein in prices with various measures. So the concern there is about asset bubbles in property, and also economists continue to be worried about rising debt. In fact, the IMF, in a working paper, said that the government here needed to address the rise in corporate debt. Otherwise, it could risk a banking crisis, sharply slower growth, or both. For Nightly Business Report, I'm Eunice Yoon in Beijing.